All right. I want to get to just your take on PPI coming up later today. So we were talking about this with some guests earlier today. CPI came in. It just was better than people feared. It was kind of a mixed. Headline better than expected. Core a little bit hotter. Now we have PPI. Could that change the outlook on rate cuts? Because if you look at the CME FedWatch tool, it's 96% chance of a 25 basis point cut and like a 4% chance of a 50 basis point cut. People really think a cut is coming, and that seems to be one of the catalysts for the new records.
Yeah, and we have a long time before the Fed meets again in September. I think PPI is going to come roughly in line with expectations, just as CPI
But does that change the
It won't
market
change the narrative
momentum?
at all. We'll keep right where we are. We're going to see that there's going to be roughly a 99.5% chance of a rate cut in September, and I think the market continues to move higher as a result. But to me, more short-term bouts of volatility ahead. Investors should be a lot more selective now to find those growth opportunities given these stretch valuations.
All right. Another thing that's coming up this week is Vladimir Putin and President Trump are going to meet in Alaska. Is there a market risk to that? Because we were talking about this with a guest earlier. There's not really a business connection with Russia and the U.S. There's some questions about the oil market and things like that. But is there a potential market ramification to this meeting? Could something come out of this meeting that could impact the market either negatively or positively?
Not that I see. Clearly, there's geopolitical risks. There's precedent risk being set here with respect to land deals or land swaps, but I don't see any direct market risk. I think the markets are now looking straight ahead to September in terms of what the Fed will do or not do and looking for that next announced trade agreement.
All right, let's get to your word of the day.
Let's go.
It's infrastructure.
Yes.
So what are we talking about? Are we talking about the U.S. infrastructure? Are we talking about AI infrastructure? What are you looking at?
I'm talking about AI infrastructure, the AI infrastructure build-out that's necessary to keep this AI revolution going. I've said on this show before, but I still contend that we're in batting practice of a doubleheader as it relates to the AI revolution. And batting practice, Frank, involves all of the necessarily building of the AI factories that are necessary for these advanced algorithms to start changing society and start changing the economy. That will take place during the doubleheader. But where we are right now and where the investment opportunities are the infrastructure side.
All right, just keep with this metaphor, because you were at the Yankees game last night. There was a 2-hour rain delay. And so you actually, you were delayed from actually watching the game.
Yes.
Is there any potential for a rain delay in this narrative that the build-out's going to get kind of maybe frothy, kind of how the market is, like there's going to be enough capacity? And some of these trades that you're talking about in the infrastructure, by the way, your pick is AECOM.
Yes.
Those could be impacted negatively because they've already run up and they also have very high valuations.
I always follow the adage, Frank, of follow the money, and we continue to see companies announcing tens of billions of dollars of investment into AI infrastructure. Who are the companies that are going to benefit from all that spending? ICOM is one of them. They're actually the infrastructure partner for the upcoming 2028 Olympics in Los Angeles, but they also provide engineering, consulting, and construction services to data centers. That's where the puck is going, and it's where the puck is right now.
Okay. I want to get to another part of this. We're using a lot of metaphors. Baseball, hockey. I'm just going to get it back to finance. You're also looking at municipal bonds.
Yes.
Why are municipal bonds attractive right now?
So municipal bonds have struggled year to date on a price basis, right? And a large reason for that is because issuers pulled forward all of their new issuance with the fear that potentially the tax-exempt provisions of municipal bonds would be lost as a result of the One Big Beautiful Bill Act. That didn't take place. So what we see over the remainder of the year is less issuance. Anytime you have an asset class where you have less supply, increasing or the similar demand, prices are going to move higher. Plus, if you're a high net worth investor, tax-free income is always attractive. So from a total return perspective, it's one of the three investments that we like the most right now.
I hear this from a lot of people, and it's got to be quick because we're almost out of time.
Yes.
When you're looking at bond ETFs, we were just showing the MUB, the iShares Municipal Bond ETF.
Yes.
The price action on the ETF often moves lower, but really what you want is essentially the coupon out of the ETF, right?
Absolutely.
Okay.
And I think you want to look through the ETF and buy the individual bonds themselves. So you have a dependable stream of income, and you also have that principal protection when held to maturity.
All right, so we don't care about the price action. We just care about the coupon coming in.
Most investors, if they're buying bonds for the income potential, care about the coupons. Obviously, a little total return is nice in terms of where you buy them, but it's really about that dependable income stream.